Hello everyone. Welcome to the Coin Daily channel. If you want to be informed about the latest information from the world of crypto, subscribe to the channel and do not forget to turn on notifications. The historic merge upgrade resulted in anticipation regarding Ethereum's ETH prospects for the future, with the possibility of attracting new users to the platform. However, with the prevailing market downturn, the initial stages of the merge have failed to live up to the expectations, with the asset recording capital outflow. In particular, as of October 3, Ethereum had a market capitalization of $195.89 billion, representing a loss of 19.22% from the $158.23 billion recorded on September 15, when the merge officially took place. Over the period, the asset has lost about $37.66 billion. At the same time, the capital outflows are reflected in Ethereum's price, which has steadily plunged while struggling to stay above $1,300. By press time, the decentralized finance (DeFi) asset was trading at $1,290, a drop of over 23% from the $1,590 recorded on September 15. The merge was expected to drive more interest in Ethereum after the network officially transitioned to the proof-of-stake (POS) protocol. The upgrade is meant to make Ethereum a deflationary asset and potentially attract institutional capital. Therefore, the outflow in the capital is among the indicators highlighting that the merge is yet to have a huge impact on Ethereum. However, proponents believe the upgrade will have a long-term effect considering it's just part of Ethereum's more extensive roadmap. However, the projections have not been realized as Ethereum and the general crypto market continues to battle the prevailing macroeconomic factors that have outweighed equities and cryptocurrencies. Notably, the merge has turned out to be a buy the rumor sell the news event. Furthermore, Ethereum is facing regulatory uncertainty based on its possible classification as a security. Notably, Securities Exchange Commission (SEC) Chair Gary Gensler recently noted that POS assets could lead to anticipation from investors who might intend to make profits. Therefore, following the merge, a section of investors are expecting Ethereum to be SEC's next target. It is also important to note that after the merge, a section of the crypto market suggested that Ethereum might flip Bitcoin (BTC) in market capitalization to become the ultimate hedge against inflation. However, the capital outflow appears to dim this projection. In the meantime, investors are closely monitoring Ethereum for the next price action, considering the value has remained steady despite the prevailing market conditions. Ethereum and ETH-oriented products are seeing their second consecutive week of inflows, according to a fresh weekly fund flow. Thus, during the past week, there was an inflow of $5.6 million into these assets. Despite continued positivity, month-to-date and year-to-date stats for Ethereum-oriented products remain disappointing, which means outflows. In the first case, the outflow was $65.1 million, and in the second, more than 5 times more, or $361.3 million. Outflows from ETH-oriented products occurred almost all the time in the run-up to the Ethereum merge, which took place on September 15. At that time, investors in such instruments rushed to sell out, as opposed to those who decided to stay within the crypto space and keep their Ethereum staked. Then, after the event was over, these exchange-traded products began to be in demand again, as evidenced by the inflow of funds into them. Most experts have positive predictions for ETH. Furthermore, the bulk of long-term Ethereum price projections are upbeat. According to Changelly, the least expected price of ETH in 2025 is $7,336.62, while the maximum possible price is $8,984.84. The trading expense will be around $7,606.30. Coinx also predicts ETH could have a relatively successful year in 2025 because there may not be much of an adverse impact on the asset. There is little doubt that the bulls could be well positioned and retain a significant upturn throughout the year. The asset is anticipated to reach $11,317 by the end of the first half of 2025, notwithstanding possible brief pullbacks. However, you have to remember that the year is 2025, and a lot of these projections are based on Ethereum 2.0 launching and performing successfully. And by that, it means Ethereum has to solve its high-cost gas fees issues as well. Also, global regulatory and legislative frameworks have not yet consistently backed cryptocurrencies. However, even though newer and more environmentally friendly technologies have been developed, analysts frequently claim that Ethereum's first-mover advantage has positioned it for long-term success, despite new competition. The price predictions seem conceivable because, in addition to its projected update, Ethereum is anticipated to be used more frequently than ever before in the development of dApps. Changelly also argued that the price of ETH in 2030 has been estimated by cryptocurrency specialists after years of price monitoring. It will be traded for a minimum of $48,357.62 and a maximum of $57,877.63. So, on average, you can anticipate that in 2030, the price of ETH will be roughly $49,740.33. Long-term Ethereum price estimates can be a useful tool for analyzing the market and learning how key platforms anticipate that future developments like the Ethereum 2.0 upgrade will affect pricing. Crypto Rating, for instance, predicts that by 2030, Ethereum's value will likely exceed $100,000. Both Pantera Capital CEO Dan Moorhead and Devier Group founder Nigel Green also predict that during the next 10 years, the price of ETH will hit $100,000. The functional capabilities of the network, such as interoperability, security, and transaction speed, will radically change as a result of Ethereum 2.0. Should these and other related reforms be successfully implemented, opinion on ETH will change from being slightly favorable to strongly bullish. This will provide Ethereum the chance to entirely rewrite the rules of the cryptocurrency game